Before we get started, we have to acknowledge the fact that we are under the threat of a headline, and it's a positive one. The US government is still shut down. Any hint of a deal, whether real deal or just a stopgap measure, may bring about some green ticks in relief. Hi everyone, Nick, recapping the week after the seminar that we put together for Friday and Saturday. Thank you, Raghu, for an amazing presentation. The team did very, very well. The attendees were also awesome. It was good to see and meet some people. Plain and simple, we bought the dip from the 23rd and we finished the bounce and made a higher high. That behavior has been going on the fourth month. Maybe this is the fourth month. And I would assume the safe thing is to assume that this continues until they tell us they're done. And usually they give us hints on lower time frames, and we haven't seen any of those. I'm going to run through the indices quickly and then focus on whatever is inside the indices to see where we can catch the next group that wants to run. You're looking at the S&P. This last box here you're looking at is so we closed at the upper end of what we forecasted last Monday. Tomorrow morning I'll have new boxes for you, and these are based on what I see in the options. A similar story, which are the NASDAQ. Now there might be some potential there. You see that big red W? It just says that we can come down to 598. 601 was target one. We're approaching that. 598, 596 is doable. So is 592. As long as they're below 610. The IWM, slightly different formation because they are in the process of trying to break out. I had an arrow that said vulnerable because of that red W, and they did not yet price it out. They are not done yet with that red W. Technically, it is still available. We'll see how strong they are at keeping above the 917 box. A standout performer this week was the XLV, the healthcare sector. They had news, game-changing news from the government. Therefore, the exuberance is in that they are going to be able to sell directly to consumers at some level. So the question for this week is, can they continue? Technically, that stock should find resistance from the March timeframe. Before we go to the other sector that's strong, who else can come in? Maybe some of the laggards. I believe the XLF, the financials, XLF, KRE, have been lagging relatively. It's not like they're slouches. They're just not as happy like tick for tick. So maybe they are consolidating before they go into the next earnings report, which is not this week, I believe next week. And the KRE, if you're interested, is also not trying to push higher. So maybe these guys will take the baton and run with it. You know who else can do that? The mega caps. So the largest companies on the planet, the 7 largest companies, have somewhat been laggy. And they have the power to levitate the markets or drag them. So now we go to the real superstars, tech. Look at the XLK. The sector is soaring. And the SMH, you'll see the outperformance there. These are daily candles there. And within those sectors, companies that we would look at are like Seagate. It'll be even more impressive. You see how they're a moonshot now. The excitement is over their sales growth, and it's definitely higher than it was before. So you would have to ask a question. At one point, we would say, okay, the stock price has outpaced itself. KLAC, I believe, is another one. Lam Research. You see, they're all moonshots like this. ASML, Applied Materials. Some of them are approaching prior failing zones, and the first set were just moonshots altogether. So these are the stars. How far can they rally? The excitement over AI and the whole ecospheres, like AI brings about the need for chips, it brings about the needs for memory and processes that get those two things off the ground. So that's the excitement that's there. Seemingly, there's no worry anywhere. But, you know, there was one oddity this week, which was the VIX. I read a statistic that every day the market was up this week, the VIX was up as well, and that's happened one time before. The last time this happened was in the 30s. And they also noted that back then, the end result of that was a giant rally, not a drop. So it wasn't a bad thing that this happened. So the bottom line, if you wanted to just hold with the market, you just be long the indices or buy them on dips and expect higher highs. That's what's been going on. I think it would be smart to shore up a portfolio of assets. It's cheap to buy insurance, and I would buy insurance if I needed it. And so until that the market decides whether it wants to leg up another 15 or 20% or give back 15 or 20%, there are a lot of stories inside, and I'll try to bring you those stories every week.